Malaysian banks may report lower profits this year thanks to cheap oil. According to a Reuters report, analysts are warning of a hit to earnings because of higher provisions for bad loans to the local oil and gas services sector. In neighbouring Singapore, the collapse of oilfield services firm CIMB has been cause for concern about the size of DBS Group's exposure to the industry. Quoting Nomura's Tushar Mohata, the Newswire says, Malaysian oil and gas players may be in a better liquidity situation compared with their Singapore peers, but the current situation is still going to be an issue for our banks. Just last month, Perisai Petroleum Technology said it was seeking to extend the deadline for a $92 million bond. Meanwhile, Maybank saw its net profit fall 27% after loan provisions jumped more than threefold to nearly 1 billion ringgit. However, Fitch Ratings Elaine Koh told Reuters that the impact on profit should be manageable. This is because banks have been making enough to absorb the higher impairment costs and profitability has remained adequate. CIMB Group Chairman Nazir Razak is calling for prudence in the upcoming budget 2017. The banker said the government needs to know where to cut and where to spend in order to bring down fiscal deficit to below the 3.1% of GDP target. He adds that the Najib administration's utmost concern is finances, and that the government has to show that despite the difficult external condition, it is still able to achieve the target of a low budget deficit. He told the press that less important or frivolous spending must be reduced to plug the bleed, as investors are scrutinizing the country's balance sheet. Nazir said he would prefer to see more funds going into infrastructure and education. Packaging company Sintex reported an 11% hike in fourth quarter net profit on higher revenue, better operational efficiency and demand for its affordable properties in Johor. Earnings came in at 54 million ringgit from some 49 million a year ago. Revenue was up 24% to 561 million ringgit. It proposed a final dividend of 10 cents per share. For the full year, net profit jumped 52% to 241 million ringgit. Net income stood at some 2 billion ringgit, up 22%. MD Lim Peng Jin said the performance was due to expansion in its consumer packaging operations as well as the broadening of its clientele across the region. Sabah-based palm oil and cocoa planter Teck Guan Perdana had a bumper quarter with net profit up almost 145%. First quarter earnings stood at 6 million ringgit, up from 2.6 million from a year ago. This is all thanks to higher selling prices for its palm oil products, a favorable exchange rate, and an increase in sales volume. Revenue-wise, it's up by 45% to over 96 million ringgit. Moving forward, Teck Guan says current palm oil prices remain resilient on account of low stock levels, and the group is closely monitoring the global market on palm oil products. Still, the company will stay cautiously positive on the coming year as the business continues to be challenging. Bina Puri has bagged a plant building project at Petronas's Rapid project in Pengerang, Johor. The 11-month contract is worth 18 million ringgit. Bina Puri says it accepted the letter of award from India's Punch Lloyd. This award brings the contractor's unbilled book order to over 2 billion ringgit. It's expecting the project to contribute positively to its earnings for FY16.